Welcome everyone and good morning. So you are at the right place at the right time because today we're going to talk about the Bitcoin ETFs and what are some of the benefits but also some of the risks involved with those ETFs. And we have really fascinating, interesting and knowledgeable speakers here with me here on stage. So let me introduce you to these fine gentlemen first. To my very far left, we have Chris Sullivan, who's the co-founder of Hyperion Decimus, and it's one of the first funds that really started trading Bitcoin options. So he was at the ground floor, built it all up with his team, and it's really exciting stuff. And he had multiple appearances in Real Vision. Recently, he mentioned a Breedlove interview, which had like 12 million views, so you should check that out. So really good, interesting insights there. And then to my immediate left, we have Frederick Krueger here, an investor, has traded over 6 years, prop trading at Wall Street, and such huge names as Sullivan Brothers, Greenwich Capital, had 10 successful exits, 3 over 100 million USD, and says that he has been converted to the cult of Bitcoin in 2019 by none other as Tom Lee, and also started a few, Tom is a great guy, and also started a few wallets. So these individuals have been in the markets, have been trading, have been active, really know a lot about ETFs. So let's set the stage first here about the ETFs. It has been one of the most impactful ETF launches in US history if you look at the ETFs. And many of the market observers didn't really see it coming. So for instance, Bloomberg thought that within the first year, maybe the ETFs are going to have like flows of 15 billion or something along those lines. However, then within 6 months, it was already 17 billion. So it was really surprising. Right now, so that you get like a sense of what's going on, there's roughly 930,000 Bitcoin being held by US ETFs alone, which is, there's only like 1/4 of that is being held abroad. So the US is the biggest market. So let's jump in right now. Maybe we start with you, Frederick. What do you think is one of the least obvious benefits of the Bitcoin ETFs? And we will talk about the risks later as well.
Well, I think the people don't understand how difficult it is for normal people to hold Bitcoin in Coinbase or in something like a Ledger wallet. I think that as Bitcoiners, we take it for granted. We have our cold storage. We think it's great. But the average person, the average equity holder, the average person with a Schwab account, until January 11th of this year, had no actual way to buy Bitcoin. And I think the ETF changes everything.
Chris, what's your take?
I agree with that in terms of simplicity. And I would argue, because Bitcoin is an apex predator asset, what's bad is good and what is good. So it's a really interesting, arguably culmination of first principles in asset form. I think ETFs are pieces of shit in general and do not invest in them. They are trading vehicles at best, fraud at worst, full of opacity, full of legal jargon, and if you read any of the risk disclosures, you'll never buy one. Maybe VanEck and Bitwise because they actually disclose their holdings. But as far as like a pro that I'm experiencing that most people don't take into account is the larger investor community on the institutional side now can't say to the many VCs or hedge funds in the space, hey, we're not investing because of regulatory. So it does bring forward the dialogue of the asset itself having a larger position in institutional portfolios. So that is a pro. And then Fred is right. It's a pain in the ass to learn how to run multiple cold storage wallets. However, it's like how I kind of make it relatable is if you don't know how to cook healthily, you go to McDonald's and you suffer the consequences. So I think people should learn how to use this stuff, and it's part of the education process.
Well, I would like to just rebuttal there is we've all seen Joe Biden and his mental acuity.
Which one?
Yeah, exactly. Which Joe Biden? But look, there's a lot of guys who may not be quite as far gone as Joe Biden, but there's a lot of guys who are getting up there in age in years, and they really honestly don't the idea of writing 24 words down and engraving on a steel plate somewhere is not something that they like. The idea of doing a two-factor authentication with Coinbase and creating a new account and showing their passport up and taking a selfie is not something that they relish. So, there's just a very large group of people for whom their assets are in Merrill Lynch, Schwab, Goldman, wherever, Morgan Stanley, and they don't want to move those assets. They want to have those assets stay exactly where they are, and they want to click a button that says IBIT or BITB, and they just want that to have exposure.
But Fred, they're not even at Schwab or Morgan Stanley, technically and legally.
Well, they're at Coinbase. The actual underlying is that. But look, I would argue that these assets are safe. You're not going to the chance that you're going to lose your keys by self-custody is far greater than the chance that IBIT is going to rug you, right? So I really do not think that there's a very significant risk that IBIT or any of the other Bitcoin ETFs is going to rug you, or Fidelity. These are not. A lot of people have said these are like Celsius. No, this is a major upgrade. And so, number one, these things are very legitimate. Number two, when you do want to sell them, the spreads are incredibly tight. You can sell whatever size you want with the 10 basis points, no problem.
So as you can see, most panels that you attend, everybody's agreeing with one another. Here we have some disagreements, so that's great. And so let me also provide some other context that I forget to add, because you might ask yourself, why is this random German dude sitting there and moderating? My name is Wolf. I'm the CEO of Students for Liberty. I have a PhD in political economy. I've been studying financial markets and lawmaking during crisis, and I'm a Bitcoiner for many, many years. We actually pay 20 out of our 80 staff members in Bitcoin, accepting Bitcoin donations since 2015 as well, and not only preach the word, but also use it in the business. So going back to some of the controversy here, because you talked about some of the benefits here, but there's also risks associated with it. You have different assessments of the risk, but one of the obvious risks is with the ETFs, there's now rehypothecation. Now, and so that means there will be most likely more Bitcoin beyond the 21 million cap. Is this a drawback for the ETFs, or do you see that differently? You seem to be disagreeing with that, Fred.
Well, no. Yeah, I do disagree with that. And I would say that, again, this is not Celsius, right? This is not BlockFi. This is not some randomly unregulated private thing. This is a public. This is a security. These are SEC vetted institutions. The authorized participants are Goldman Sachs, J.P. Morgan, Jane Street. These are very safe instruments. They have the Bitcoin. Now, is there concentration risk having one custodian, Coinbase, having the majority of these funds? Well, to some extent. I do think that's somewhat of a risk. If you want to diversify it, you can. You can go to Fidelity. They do their own custody. You can put part of your assets in Fidelity. They have a very quality offering. Their platform's great. So there's ways around that, but I just don't think those are the major risks here. Relative to the risk of, the biggest risk in all of these things is you selling your Bitcoin too early. That is your biggest risk, right? The biggest risk is seeing some headline that Kamala Harris is going to win the election, and you're panicking, and you sell your Bitcoin, and you're the guy who sold. You're like, not to put too fine a point, but like the Germans who panic sold, right, at 59,000, and now we're here looking at their emergency sale cost them $800 million.
There's a reason why I live in this country. Chris. Please go ahead.
Well, I want to clarify. I actually don't disagree with anything Fred's saying per se. I think it's just about application of first principles and analytics on weight of the evidence for risk reward. Now, perhaps those names you mentioned I would not consider good actors, nor are they investment grade. And you know damn well they're rehypothecating treasuries, they're rehypothecating stocks. There's no Reg NMS, no one's getting best execution, and it's fiduciary malpractice to put a commodity inside of a security, right? So does anybody know the delta on gap risk and how important this is in stocks, let alone in crypto? These things can break upwards because by the way they're constructed, they're negatively convex. And the risks that are unknowns with that mathematically are so great, it doesn't meet me in the middle on the ease of access where I can point and click. So I think it destroys some of the self-sovereignty process that people can go through, and then it arguably could only hurt it from a price impact standpoint. You're already getting Coinbase sitting at a premium above other global exchanges, so clients in these ETFs are not getting best X, which I thought was required by law. And then also in the disclosures, they're not securities. They're not registered under the 40 Act, and the CFTC has washed their hands of them too. So I think it's a lot of gray area in terms of how I would want to feel comfortable as them being investment-grade, ironclad contracts as well as vehicles.
They're so much better, however, than anything that's come before them. Let's take, for example...
I don't disagree. They're way better than Celsius,
so,
yes.
Well, not only that, they're much better than GBTC, okay?
Well, that's not a hard benchmark.
Well, it was the benchmark, right? So, you mentioned the number of 900 and almost a million Bitcoin that's in these ETFs. GBTC had 600,000 of that when these ETFs were launched. They had 650,000 Bitcoin were in GBTC. And, GBTC started 2023 at a 45% discount to net asset value, right? So these closed-end funds can trade at a massive discount, right? And some still are. You can buy the Bitwise, BITW fund, and it's trading, I think, the last I checked, at a 27% discount to NAV, right? So, we've had a major upgrade for institutions, for most people. If you understand how to self-custody, there's a lot of great things with self-custody. I'm a big fan of self-custody. I'm a big fan of multi-sig. I think it's great. For the rest of us, there's the ETF.
It's kind of like a gateway drug, in my opinion. There are pros to it for sure, where you're bridging from companies that were overinvested in by VCs, run on a CSV file, weren't keeping track of anything, like you're saying, to armies of lawyers going into writing 186-page risk disclosures and prospectus. So it is an upgrade. It is, I think, a bridge to the next phase of adoption. But there are a lot of mechanical risks, a lot of nuanced risks that are certainly not articulated or disclosed to the public. And because it is, in fact, paper Bitcoin, not spot Bitcoin. With the cash settlement, you cannot make the argument that it is spot. It's paper Bitcoin, just like GLD is paper gold. You can argue the merits of both. I'm arguably going to just make a market regardless, but I think for investors, if your game is to exit the bullshit financial system that we call TradFi now, then this is not the way to do it.
Continue not to mince words. I like it. And one of the obvious things is, of course, there's more centralization right now. I mean, they're decentralized compared to GBTC back in the day. Now it's a little bit more centralized. However, most of it is laced with one custodian. Now the question is, how does it look like for insurance? Because this is one of the biggest honeypots out there for people to go after. Or let's see the systems go away, or somebody screws up the keys to those coins. How do you see this? Because from what my research is, it's insured up to 320 to 400 million USD, which is nothing, and it's for all of the cryptos that are there. So how do you see this as a potential risk?
Well, they aren't stuck with these custodians, right? If you talk to a lot of people in the ETF space, they'll say they filed because they thought they were going to get the fastest approval by having Coinbase as their custodian, right? But they can absolutely switch custodians, and some have, right? So I think Van Eck and Gemini, right? Yeah. So both of those have, Van Eck's using Gemini, and what was the other one? There's another one that switched custodians. But in any case, you can switch custodians. I think we're really in the first inning of this thing, so I fully expect we're going to start seeing even multi-custodian type solutions down the road. But getting back to a point that Chris made, I think the biggest drawback right now, and the one I think Bitcoiners are really honing in on, is this cash settlement, right? I think this is a big drawback. I think there is a possibility now, and Hester Pierce has mentioned this, right, that we could see potentially a in-kind settlement redemption process potentially as early as 2025, right? So I fundamentally think that that's going to happen, right? How is it going to happen? Is it going to mean that your Bitcoin you can transfer from the ETF to Bitcoin without any kind of tax consequence? Potentially, I mean, down the road, right? I think that makes sense, right? If you hear what RFK said, the taxation, that we might be moving to a world where Bitcoin is just not taxed, right? So how great would it be if you can take your Bitcoin, you can send it to BlackRock, they can custody it in the IBIT, and then you kind of need it in your Casa multisig. You just give them a Bitcoin address, and then they send it back to you, and now you hold it. That's your best of all worlds, right? So I think that we have to get to this where we can move between the ETF layer and the actual custody layer. Then it's best of both worlds. You have both. You can move between them. And then the ETF really is a kind of custodian on demand.
It makes perfect sense, and we already have seen this happening with gold. You can have like ETFs, and then you can redeem them to physical gold. I mean, you have to pay like a higher premium for that, but it's doable.
But especially with Bitcoin, right? With taking possession of actual gold is difficult. I have physical gold. And look, it's been a great investment, but look, holding physical gold is tricky, right? And holding Bitcoin is tricky. You really need, if you're going to hold substantial amount of Bitcoin, you really need to understand all the risks involved, and I would really recommend a multi-sig setup from either Unchained or Casa, one of those two players. I don't think single sig Bitcoin is good enough for most people. I think that's too high risk, and so I would say you're going to have to go through a multi-sig solution, and those are complex for most people.
Yeah, we run multi-sig within the hedge funds that we have, and it is complex, and you do like three of five of the principles. But personally, I have all the above. I have Gemini, I have Coinbase, I have single ledger, which was my OG ledger, and then I have MPC with my wife, and then because basically I don't matter at this
Same
point,
here.
Fred. Yeah. But I would propose, I think, in terms of the mechanics of trading, I would argue a good old-fashioned mutual fund would be the preferred wrapper for what you described on the spot settlement side and for tax efficiency. It creates dangerous trading precedents to have an ETF. And the process called create redeem of the shares of ETF, because of the velocity of the asset, there's no way they can keep up with the upward trajectory. It's not mathematically possible. So these risks aren't properly disclosed, they're not properly discussed, and it's only going to harm the investor. And case in point, look at all the Volmageddon crashes that occurred in ETFs that were VIX related. Currently, you can look at March 23rd, 2020, even the bond ETFs dislocated massively. So overarching theme is that ETFs are not a prudent investment vehicle. They are trading vehicles only.
We beg to disagree. But look, I think ETFs, as Larry Fink said, ETFs are eating the world, right? So if you look at where, one of the things that a lot of people don't understand is how big ETFs have become, okay? So if you go back to 2004, there were $300 million worth of ETFs, $300 billion worth of ETFs. They're currently $10 trillion worth of ETFs, okay? So we have gone up 30x in the last 20 years in terms of the volume of ETFs. So ETFs are eating the world. And you know what's not eating the world? Mutual funds. Mutual funds are not growing at all. They've been in decline now for years and years and years. And they're just, even you have single stock ETFs, like Tesla ETFs, right, that are working. So the ETF wrapper is kind of it is the preferred wrapper for the financial class right now. It's definitely the winner. And I bet is, as you mentioned, the best performing, the highest growth ETF of all times, passed $20 billion in 6 months. And that really tells you something. When they thought the entire class could not hit over $15 billion, and IBIT alone has hit 20. That's just amazing to me.
Really, it really is. I mean, it shows you the pent-up demand just to invest in the asset class.
Now, ETFs might be eating the world, but we have to be careful that we are not going to be swept up in that and being eaten as part of that.
Fred, he's a genius. He knows it's systemic. He knows exactly what I mean. Like, mutual funds haven't grown because of the ETFs being pushed. That doesn't make them a better or worse vehicle. Mechanically, they're a way better vehicle, and you know that mathematically. And then I don't think it's responsible to have more ETFs than there are stocks, for example. Like, someone's got to put a rein on how ridiculous and embarrassing this is. I mean, it's fiduciarily negligent, Hester, if you're here, to allow all of these issuances. And then if you look at the infrastructure of most of the ETFs, they are tracking mechanisms. They don't actually own the underlying assets. So then what happens? You've got to have a debenture that gives you pre-trade credit from either the exchange or the prime broker, and then some kind of weird multi-intraday settlement of the asset, and it's just complete and utter opacity. So on a mutual fund side, they can actually trade all day, do a good old-fashioned passive VWAP, accumulate N number of percent of Tesla to weight the 40 Act, not having all of the problems and opacities associated with exchange-traded funds.
So let's do 2 more quick questions here. So we are Bitcoiners. We all know about Executive Order 6102. And now we have much more centralization with the Bitcoin ETFs. It's like, do you believe that there might be like a state attack on Bitcoin through the ETFs at some point possible? Because we have to keep in mind that right now there's $34 trillion in debt, and that doesn't take into account 175 trillion of unfunded liabilities on top of that.
Who do we owe it to, Wolf?
To ourselves.
Right, so we can just wipe it off the ledger.
Yes, if we are Keynesians, but we are not.
Yeah.
I would really argue they should issue another 34 trillion and buy Bitcoin with it. Okay, my goal is to get Donald Trump to double the size of the debt, double it, and buy $34 trillion worth of Bitcoin. And you know what? I think we're going to be in excellent shape if he does that. We have to think bold here. This RFK stuff is nonsense, okay? This is like pussyfooting around, you know. Pussyfooting around 4 million coins is table stakes, okay? And I hope if Donald Trump is listening, I hope we go to 10, you know. I think Michael Saylor has said it, America should own the majority of Bitcoin. Why not? You know, let's think boldly. Let's boldly go where no man has gone before. So you say state actor. I would like the United States to be the largest owner of Bitcoin. Let's own the most Bitcoin, our country. And let's make sure it's not China that owns that Bitcoin. Because if China owns the Bitcoin, it's going to be a little bit like Spain in the 16th century. Spain owned 50%, the majority of the world's gold, right? And basically, who has the gold rules makes the rules. And so I think we need to make sure that we are the country that owns the gold. And that's the most important thing I think that I'm hearing from this conference.
Yeah, and so I would just like to add here, if somebody from the future administration is in the audience, like these gentlemen should be on the Council of Economic Advisors, so please note that down. But Chris, go ahead.
I think we do need to take into account all the positives here. First off, commend the Bitcoin Magazine folks for throwing this is the best one I've been at. I've been to pretty much every single one since inception. And we're all fortunate to be in amongst friends and family essentially here, and to have RFK and Trump even behind us is pretty incredible. To me, Bitcoin's already done most of what it's supposed to do. But I couldn't agree with Fred more. It is not time to pussyfoot around. It is not time to be weak. It's time to be alpha. This is an apex predator, and we need to act like the apex predators Americans used to be only for good, not evil.
And my final three letters, LFG.
Love it, gentlemen. Thank you so much. And so, last maybe one sentence answer. Would you recommend Bitcoiners specifically to buy the Bitcoin ETFs? Yes or no?
Yes. Unequivocally, yes. Especially if you're an older Bitcoiner like myself.
I would be negligent in my fiduciary duty if I commented.
Okay. Wonderful. Please, everyone in the audience, please give this gentleman an applause.